When we look at East Africa, and there's a country called Uganda in East Africa, and in the early 70s, a dictator came to power in Uganda, Idi Amin. And Idi Amin noticed that in Uganda, most of the businesses were controlled by East Asians, Indians, Patels. They controlled like 80% of the economy. And these Patels had come to Uganda. They were brought to Uganda about 100 years ago to work on the railroad almost as slaves, right? But because they're natural entrepreneurs, they went from railroad builders to eventually owning and controlling his whole economy. Right. And he was pissed. So Idi Amin said, Africa is for Africans, and you guys are not Africans. And these Patels had been in Uganda for 3 or 4 generations. That was their home. They were Ugandan citizens, born and raised, right? And what he did is he nationalized all their businesses and he threw them out of the country.
Which just means took their businesses, right?
He just took them. Yeah, he basically confiscated not their businesses, homes, everything, confiscated all their assets. And he told them, you got 90 days to leave the country. Wow. So these Patels in Uganda were stateless. Okay, you're being thrown out. You're a citizen of a country. The country's throwing you out, right? And they lost all their money. So they were able to convert a very little small sliver of their assets into gold. And the United States took some Patels as refugees. The UK took them. Canada took them. India, surprisingly, refused to take the Patels, refused to recognize the Patels had any right to return to India because they said, you haven't been here for 100 years. And India was at that time dealing with the Bangladesh refugee crisis, so it couldn't deal with anything more. A small number of Patels, a few thousand of them, came into the United States in the early 70s as refugees. They didn't have skills there where they could get great jobs. They spoke English with a funny accent. And they realized that, look, if we buy a really small motel, 10, 12, 14-room motel, the family can live in 1 or 2 rooms. Motels are labor intensive. The family can do all the work.
It's a job and a house together.
Yeah. So basically cooking, cleaning, front desk, laundry. What they started doing is they would buy these motels and basically fire all the staff and move into 2 of the rooms. And because they had no costs, they were able to charge nightly rates that were lower than all the neighboring motels. So what would happen is that the Patel-owned motel would be running 100% occupancy. The other motels couldn't match that rate because they'd lose money. Right? Because they had
staff and
workers' comp and staff and all that stuff, right? And what the Patels started to do, and Patels were very frugal. They basically were vegetarians. At that time in the US, if you were vegetarian, you were really hosed. You couldn't really eat out anywhere. So they were forced to just cook themselves, which was cheap, right? So there wasn't much of a grocery bill. And what they started doing is, as their nephew came of age, for example, they would help him out to buy his own motel, right? And then the nephew would get it going, and then the next one. And you run this for 50 years, and you end up with 70% of the motels in the country under Patel ownership. Not only that, they've actually gone upmarket now. So a lot of the Hiltons, Marriotts, Westons, if you really look, you'll find it's under Patel ownership. Right. Same math. They always are very good operators. And then they went into 7-Eleven, laundromats, Dunkin' Donuts, all of it, you name it. And but bottom line was that these were entrepreneurs that were low-cost producers, right? Low-cost producers have an inherent advantage. And I remember when I first met Charlie, he had read my book and we were discussing the Patels. He says, yeah, I got some friends in the motel business. I just tell them, don't ever try to compete with a Patel. If you ever find yourself in competition with a Patel, just find another game to play. Just move on. It's not worth it.